Somewhere between a spreadsheet and a headline, Tesla just told us something important and almost nobody caught it. Everyone was looking at delivery numbers. Everyone was looking at margins. Everyone was arguing about Robotaxis and Optimus robots on social media. But buried in the same earnings release, there was a line about Bitcoin. A small line, almost forgettable if you weren't paying attention. And that's exactly the problem, isn't it? The things that move markets quietly are usually more important than the things that move headlines loudly. So here's the real question we're going to answer today. Did Tesla just change its entire approach to Bitcoin? Did Elon Musk finally decide to buy more, sell everything, or just sit on his hands one more quarter? And why would a car company's crypto decision matter to you? Sitting wherever you are right now, holding your coffee, maybe your phone in the other hand. Stick with me till the end, because the answer isn't really about Tesla. It's about what's happening underneath the entire financial system. And Tesla just happens to be the company that shows it to us first. Quick note before we go further. This video is for education and information only. Nothing here is financial advice, and you should always do your own research or talk to a licensed advisor before making investment decisions. Markets are unpredictable, and past patterns never guarantee future outcomes. Now, before we dive in, if this is your first time here, welcome to the Wealth Continuum. We spend our time here connecting the dots between big companies, big money, and the real-world impact on your wallet. If that sounds like your thing, you know what to do. On the 22nd of July, 2026, Tesla dropped its second quarter earnings report. Reporters ran straight for the vehicle delivery numbers. Analysts ran straight for the profit margins. And honestly, both of those stories were dramatic enough on their own, but somewhere in the same filing sat an update on one of the largest and most talked about corporate Bitcoin positions in the world. So why did almost nobody talk about it? Simple. Bitcoin is now a fairly small slice of Tesla's overall balance sheet compared to 2021. But here's the twist. Every single institutional investor, every hedge fund analyst, every treasury manager at a Fortune 500 company still watches this line item like a hawk. Why would that be? Because Tesla, whether it planned to or not, became the test case for corporate Bitcoin adoption. What Tesla does next tells other companies what they can get away with. Comment below and tell me, do you think other big companies are quietly watching Tesla's playbook before making their own crypto moves? Let's rewind for a second, because you need the full picture before the recent numbers will make any sense to you. Back in early 2021, Tesla shocked the entire financial world. The company bought roughly 43,200 Bitcoin for about $1.5 billion. Media outlets lost their minds. Elon Musk, almost single-handedly, changed the conversation around corporate treasury management overnight. Then came the pullback. In the second quarter of 2022, during a period of serious uncertainty tied to lockdowns in China, Tesla sold off around 75% of its position, converting close to $936 million back into cash. Musk was clear at the time. This wasn't a loss of faith in Bitcoin. It was about strengthening the company's cash position during a genuinely uncertain moment. And here's where it gets interesting. Since that sale, Tesla hasn't touched its remaining position. Not once. Through Bitcoin's crash below $16,000 in late 2022, through the recovery, through the euphoria of Bitcoin's all-time high above $126,000 in October of 2025, and through the sharp pullback that followed, Tesla just held. At first glance, that sounds boring. But stay with me, because boring is exactly why this story matters right now. Here's the part everyone skipped past. Tesla currently holds 11,509 Bitcoin. That number has not moved, not up, not down, for multiple quarters in a row now. But the value on paper did move because Bitcoin itself moved. During the second quarter of 2026, Bitcoin fell roughly 14%, sliding from around $83,000 down toward the $58,000 range. Because of new accounting rules that require companies to mark digital assets to market value at the end of every reporting period, Tesla had to report an unrealized loss of $112 million on its Bitcoin holdings. That comes right after a $173 million unrealized loss the quarter before that. Now here's a distinction most casual viewers completely miss. There's a massive difference between holding, buying, and selling. Tesla did not sell a single coin. This loss exists only on paper, tied to accounting rules, not to any actual transaction. If Bitcoin recovers next quarter, that loss could just as easily flip into a gain, the same way Tesla booked mark-to-market gains on its crypto position in a prior quarter that helped offset other losses. So ask yourself this. If Tesla genuinely believed Bitcoin's story was over, wouldn't now have been the easiest moment to quietly exit? They didn't. What does that tell you? Here's what they're not telling you in most of the headlines. The real signal was never about a purchase or a sale. It's about the decision to do absolutely nothing, on purpose, quarter after quarter. This is where the mystery actually deepens instead of resolving. Tesla generated $28.24 billion in revenue during the quarter, up 26% compared to the same period a year earlier. Vehicle deliveries hit 480,126, a jump of roughly 25% year over year. Cash is clearly not the constraint here. Institutions are buying Bitcoin. Bitcoin itself has matured as an asset class, with regulated exchange-traded funds now absorbing enormous demand. So why would Tesla, sitting on a growing pile of revenue, choose to stay completely patient? A few possible answers. Capital spending more than doubled this quarter to $5.8 billion, and Tesla expects full-year capital expenditure to exceed $25 billion, with even more spending planned for the second half of the year. Free cash flow actually went negative by $1.1 billion, Tesla's first cash-burning quarter since early 2024. Where's all that money going? Robotaxi expansion, Optimus robot production, with Tesla planning its first robot rollout by the end of this year, energy storage, battery manufacturing, artificial intelligence infrastructure. You need to understand this before I show you what's next. Elon Musk isn't choosing between Bitcoin and nothing. He's choosing between Bitcoin and funding an entire second business built on robotics and artificial intelligence. Here's a genuinely uncomfortable question for you. What if not buying more Bitcoin is actually the bullish signal? What if patience, in this specific case, says more about long-term conviction than a splashy new purchase ever could? Type your honest answer in the comments. I actually want to see where people land on this. Think about it from a completely different angle for a second. Tesla also disclosed access to debt facilities, allowing it to borrow up to $30 billion specifically to accelerate investments in artificial intelligence and manufacturing capacity. That's an enormous war chest sitting there, ready to deploy whenever the company decides it's needed. And none of it, not a single dollar of it, went toward buying more Bitcoin this quarter. That's not an accident. That's a decision. And decisions like that usually tell you more about a company's real priorities than any press release ever will. Tesla is no longer the lonely pioneer here, and that alone is a massive shift from 2021. Strategy, the company formerly known as MicroStrategy, currently holds a Bitcoin reserve worth several $billion and continues actively accumulating more, funded through stock sales. That single company now provides a meaningful floor of institutional demand all on its own. Add to that the explosion of spot Bitcoin exchange-traded funds, which have pulled in enormous flows of institutional capital since their approval. Add publicly traded companies across multiple sectors quietly building small treasury allocations. Add banks that once dismissed Bitcoin now offering custody and trading services to their wealthiest clients. Corporate Bitcoin ownership in 2026 looks almost nothing like it did in 2021. Back then, it was one company's bold experiment. Now, it's a slowly normalizing part of how large balance sheets are managed. Tesla doesn't need to lead this trend anymore. Other companies picked up the torch, which honestly raises the question, does that make Tesla's quiet holding pattern less newsworthy or more reassuring? I'll let you decide, but comment below if you think corporate Bitcoin adoption is still in its early innings or already old news. But here's what they're not telling you in most of the surface level coverage. Bitcoin's own market capitalization currently sits around $1.3 trillion, keeping it roughly in the same league as some of the largest publicly traded companies on Earth. Tesla's own market value hovers in a very similar range. Two assets, similar size, wildly different volatility profiles, and yet increasingly treated as neighbors on the same balance sheets. Stay with me, because this next part connects everything together. When an asset class grows large enough and stable enough that conservative corporate treasurers are willing to hold it quietly for years without touching it, that's usually the sign of a genuine transition from speculation toward infrastructure. Not overnight, not dramatically, just quietly, one earnings report at a time. Stay with me here, because the next part connects everything we've talked about so far. Interest rate policy in the United States remains one of the biggest forces shaping investor behavior across every asset class, Bitcoin included. Just this month, the Senate confirmed a new Federal Reserve chair in a narrow vote, replacing outgoing leadership at one of the most consequential financial institutions on the planet. Any shift in Federal Reserve leadership tends to ripple through bond markets, the dollar, and eventually crypto markets too. Government debt levels remain historically elevated. Liquidity conditions across global markets remain uneven, and large institutions are increasingly treating Bitcoin not as a speculative gamble, but as one more tool for diversifying a treasury away from a single currency or a single type of bond. This is where it gets really concerning for anyone trying to time these markets perfectly, because macro conditions like these don't resolve quickly. They shift slowly, sometimes over years. So here's a fair question to sit with. Could Tesla simply be waiting for clearer macro signals before making its next Bitcoin move? A company holding this much cash, this much capital spending pressure, and this much macro uncertainty might have very good reasons to simply wait rather than react. And here's a curiosity loop worth sitting with for a moment. If a new Federal Reserve chair shifts policy even slightly over the coming months, Does that change the calculation for every company currently holding Bitcoin on its balance sheet, Tesla included? Nobody knows for certain yet, and honestly, that uncertainty itself might be exactly why Tesla chose to wait rather than commit new capital right now. But you need to understand this before we go any further. Macro conditions rarely announce themselves clearly in real time. Usually, by the time everyone agrees the picture has changed, the opportunity to react early has already passed. Companies like Tesla, sitting on this much cash and this much strategic flexibility, can afford to wait for clarity. Most individual investors watching at home can't always say the same. Let's talk about Musk without falling into pure speculation, because his broader empire absolutely shapes how Tesla treats an asset like Bitcoin. Tesla posted $1 billion gain this quarter tied to its stake in SpaceX, which partially offset losses elsewhere on the balance sheet, including the Bitcoin write-down. Musk is simultaneously steering SpaceX, XAI, Tesla's energy division, and now an aggressive push into humanoid robotics and autonomous vehicles. Every one of those ventures needs capital. Every one of those ventures competes for the same pool of resources. In that context, Bitcoin stops being the headline asset and starts becoming just one line item among many inside a sprawling, capital-hungry ecosystem. That's a genuinely different mental model than the one investors had in 2021 when Bitcoin felt like the story. Today, it's a supporting character in a much bigger production. Does that change how you view Tesla's Bitcoin strategy? Share this video with someone who still thinks Tesla is primarily a crypto play, because I think that narrative needs an update. Here's where it gets really concerning if you're only paying attention to Bitcoin and ignoring everything else on Tesla's balance sheet. Capital expenditure more than doubled this quarter, and free cash flow actually went negative for the first time in roughly 2 years. That's a company spending aggressively on the future while simultaneously watching one of its existing assets lose value on paper. Two very different financial stories happening inside the exact same earnings report. Stay with me here, because this matters. A company juggling that much simultaneous spending across robotics, artificial intelligence, energy storage, and space ventures genuinely doesn't have the luxury of treating Bitcoin as its main character anymore. It's one asset among a very long list of competing priorities. And every quarter, Musk and his team have to decide where the next dollar goes. Large companies almost never chase a rally. That single sentence explains more about institutional behavior than most finance textbooks. Instead, institutional treasury teams think in terms of risk management, cash preservation, optionality, and accounting simplicity. Bitcoin in 2026 is a fundamentally different animal than Bitcoin in 2021. It has clearer regulatory treatment. It has deeper markets. It has more predictable custody solutions. So the real question institutions ask isn't, should we buy the dip? It's, does holding this asset still make sense given our broader risk tolerance? For Tesla, apparently, the answer remains yes, just not an aggressive yes. Now push this thought a little further with me. What happens if hundreds of other companies eventually adopt this same disciplined, patient approach that Tesla has taken? Not aggressive buying, not panic selling. Just quiet, steady holding as part of a diversified treasury strategy? That right there might be the real story hiding underneath this entire earnings report. Not a purchase, not a sale, a pattern. Here's another angle worth sitting with. Fear and greed indicators across the crypto market have leaned cautious for weeks now, sitting well below the neutral midpoint. In moments like that, retail traders often panic, either buying aggressively out of fear of missing out, or selling everything out of fear of losing more. Institutions, by contrast, tend to do neither. They just wait, watch, and let the emotional traders exhaust themselves first. Ask yourself honestly, which category do you usually fall into when markets get shaky? The instinct to act immediately, or the discipline to simply wait? There's no shame in either answer. But recognizing the pattern in yourself is the first step toward investing more like the institutions we've been talking about this entire video. Let's separate the facts from the emotional noise for a second, because that's honestly where most people get this story wrong. Tesla never needed to become another aggressive Bitcoin accumulator to prove its conviction. Its actual behavior over the last several years shows something more mature. Corporate adoption of Bitcoin is becoming more disciplined, not less serious. Bitcoin, at least for companies like Tesla, now sits alongside cash reserves, corporate bonds, and other strategic assets, rather than standing alone as some kind of ideological statement. And honestly, that shift toward boring, disciplined treasury management might represent genuine maturation rather than fading enthusiasm. Here's an honest question for you, and I'd love an honest answer in the comments. Are you personally more comfortable seeing a company hold Bitcoin quietly for years, or would you rather see aggressive buying during every dip? There's no wrong answer here, but your answer says a lot about your own investing style. And while you're typing that out, tell me something completely unrelated too. What's the weather like where you're watching this from right now? I always find it interesting how many different corners of the world end up watching the same story unfold in real time. sometimes in sunshine, sometimes in the middle of a storm. Here's one more thing worth sitting with before we wrap this up. Notice how Tesla never framed any of this as a Bitcoin story in its own earnings call. Bitcoin barely got a mention. The silence itself was the signal. When a company stops talking loudly about an asset it once championed publicly, that usually means the asset has quietly become routine, not irrelevant. Routine is underrated. Routine is often exactly what a maturing asset class looks like from the outside, long before headlines catch up to that reality. This is where it gets really concerning if you're the type of investor chasing excitement instead of patterns. The loudest headlines rarely contain the most useful information. The Tesla story we just walked through proves that point perfectly. A quiet, unchanged line item buried inside a much bigger earnings report turned out to carry more long-term signal than the flashy delivery numbers everyone else was busy arguing about online. So let's land the plane here. Tesla's latest Bitcoin update was never exciting because of some massive new purchase. It was important precisely because it showed us how one of the most closely watched companies on the planet now thinks about Bitcoin. Quietly, patiently, as one piece of a much larger financial puzzle involving robots, rockets, artificial intelligence, and energy storage. The conversation has genuinely shifted. It used to be, should companies even own Bitcoin? Now it's becoming, how much should they own, and when, if ever, should they adjust that position? That subtle shift in the question itself might matter more than any single quarterly filing ever could. Before you go, quick honest check-in. What are you doing while this video plays in the background right now? Working, commuting, lying in bed scrolling? I'm always curious where this channel actually reaches people. And here's the bigger question I want to leave you with. What should Tesla do next? Buy more Bitcoin while prices sit well below their all-time high? Keep holding exactly like it has for years? Or finally trim the position to fund its robotics ambitions? Tell me your honest prediction in the comments, because I genuinely want to see what this community thinks before the next earnings report drops. Hit like if this actually helped you understand what was buried inside Tesla's earnings report. Subscribe if you want more breakdowns like this one, connecting the dots between big companies and the money decisions that eventually reach your own portfolio. And share this with someone who follows Tesla, follows Bitcoin, or honestly just needs to understand how the two are quietly becoming intertwined. This has been the Wealth Continuum. I'll see you in the next one.